Hello, YouTube. We have a problem because last week we got a warning, and this week we're getting confirmation by being below 473. And that would mean that we printed a weekly lower low. And if this continues, we might be heading for as low as roughly negative 4.8%. I'm going to go through and explain exactly what those numbers are. That pretty much comes down to the fact that we've now fallen below 470. That's the problem. So if we're going to get a stock market crash, what I've talked about is that we have to be ready for us to go all the way down to a monthly higher low, which right now that's found at 454. That is our December low. So we could be heading down all the way to 455. So if we look at our high of the year at roughly 478 and we decline all the way down to 455, that would be nearly a crash or a dip, roughly 4.8%. So a correction is 10%. A dip is 5%. So if we do slam down to strong support at 455, is that going to be a buyable dip? That's exactly what we're going to talk about today. So the cheat codes are that if we are above 480, it's a green light. It's time to put your pedal to the metal and go fast. If we're in 470 to 480, it's time to have your foot over the brake or be cautious. And on notably weekly and monthly candle closes, if we remain below 470, it's time to put your foot on the brake and stop. What does that mean? Again, please stay tuned. I'll get to all of that here. A little bit of news driving the market today is that Bitcoin spot ETF proposals are to be rejected by the SEC, but crypto ironically is down hard on the week, but it's actually, down on the day, but it's actually flat on the week, a little bit up actually. Stock skeptics say $6 trillion in cash waiting on the sidelines is a mirage. Nice. Apple leads $370 billion tech rout in reversal from group's 2023 earnings. We also note that we've fallen from extreme greed into greed. Oh no. And I'm going to go through and give an update on a couple of trades, so make sure you stay tuned all the way till the end of the video. But I'll ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, that would be greatly, greatly appreciated. I'll give you an update on these trades at the end of the video. Again, I give you that hot tip about RWM over the weekend and also into last week. I'm also going to go through and talk about relative strength on a stock at the end of the video if I have some time. Where I want to start by is saying that we're now here at 73 or back into greed, and we warned you nearly 2 weeks ago that, remember, we are now in extreme greed, so it would be a great time to be managing the risk in your account, setting stops, raising stops, and trimming. I have 3 positions here. One stopped out. That's going to be DDD. I got 1 trim, which is RWM, and I got 1 trim, which is TLT. I'll go through and explain those very briefly, but if you want to know more, just subscribe to the channel. I do stream live at 9:15 Eastern every single day. The reason why I find this so ironic is that 2 weeks ago we said, hey, time to manage the risk. And what did net speculators do? Well, they decided to short the hell out of the market. They're net short 200,000 contracts. So they knew what to do. They decided to go net short. That's not what I want to do. But there's a lot of negativity in the market right now. Decade-long S&P 500 bull surge is running into a valuations wall. Cool. What are they telling us? Between 2013 and 2023, profit recessions have largely been milder than expected. The question is whether or not this time is different. So there's some more bearish news. Jeremy Grantham rang the alarm on everything bubble and warned of the S&P could be cut in half. Oh my goodness, we're going to go down by 50%. I'm only looking for 5. And there's even more bad news for the biggest stock in the world. Is 2024 the year the U.S. Certain country tensions finally trip up Apple? Well, that's kind of important because it's the biggest stock in the entire market. And when we look at year-to-date returns, it's very obvious. We talked about this yesterday, where the biggest blocks or tech are all being sold off. People are harvesting gains so far this year, and they're rotating into healthcare, notably Eli Lilly, Johnson & Johnson, and Merck. Also some energy and UNH. But never fret. We are not going to be pessimistic. We are going to listen to the wisest investor of our generation, Warren Buffett. The stock market is a device for transferring money from the impatient to the patient. So this seems like really easy, right? It seems easy, but putting it into practice is going to be very difficult. All this means is that we now have some warning signs and confirmation on the weekly chart. But if we pop over here to the monthly chart, this is where we have to be patient in order for this pattern to play out. So here we have a few different areas, and I'm actually going to go here to SPX because that's the one that has the pattern on here. Sorry for bouncing around so much. What this basically means is that we're looking for a pattern here. Again, going back to Warren Buffett, if we're able to maintain the higher low, be patient. Let the pattern play out. I'll remind you the reason why. On the weekly chart, no one thought we were going to rally up for this much this long. We went higher for 9 weeks in a row. That's a long time. And this last pattern here led to a rally of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months in a row. We're only on month number 3. How many more months can we have? 7. That's more than half of next year. This year, sorry. Wow. So we've only done 3, but we could go as much as 10. Yes, that's the pattern. If the higher lows hold, we have a 1, 2, 3, 4, 5 pattern. High, get back down to the 50, higher high, back test, and then number 5. Number 5 is where we go up by 50%. 5-0. That's a big gain to miss out on. So what does that mean? It means until we print a monthly lower low, we have to be receptive to this. So the higher lows are holding, and last month's low is at let's go to SPY now, because I know you guys look at the smaller stock. It's currently 454.31. So if we maintain that 454.31, which you will note on every single one of my charts, the monthly, the weekly, and then also on the daily chart here, 455, I rounded it up. So after we stop pointing up on the daily chart, we get a warning on the daily chart. Then we get a warning on the weekly chart. And now we're getting some confirmation, but we'll get it confirmed on Friday when we close the candle out. So the question is, are you ready for us to drop by roughly another 12 points? If you're not, you shouldn't be buying here. Got to have some patience, like Warren Buffett told us. If you would buy more at 454, 455, hey, go ahead, lay on some risk, have some fun. That's what I would say. So if we're talking about all this negativity, what is going to drive the market higher? Whoa, Samsung to announce new phones powered by AI on January 17th. Wowzers. Is this bullish for AI? Or is this bearish for Apple? Oh, I didn't think about that. Exactly. So Apple's the biggest stock in the entire market. Right now, there's a lot of concerns for Apple, and the bears are really, really trying to clamp down. We're being told that there's a valuation wall that could happen right away, and banks kick off earnings next week. So I think we got to find out what happens here. I also want to see what happens to this net speculators positioning as we move lower on the week. Do they start to close out their position, or do they double down and go even more short? They've been losing money for over a year. Let me see what I have some time here to go through. So extreme greed to greed. I think we talked about that. We talked about Apple. $6 trillion wipeout. That's pretty big. We talked about the, let me actually keep this article up here. It's a nice headline. 370 billion wiped out. Oh my goodness. So let's go through the stocks that I stopped out on today. If you want to go back and watch the video on the channel for RWM, I got a nice trim on that one today. I've realized some gains. This has been a hedge position, and I'm really happy with it because when we look here to the Russell, I bet on the inverse. We shorted it on Friday and added yesterday. Man, it went down in a straight line, almost perfectly rejecting off our area here. So how far down could we go? Well, back below 200, which was our relative highs. That's a failed break. And then we got a rejection this week. So failed breakout last week, high, low, lower, low. And right now, looks like we want to shoot right back down to these averages at about 182 to 187. That would be a decline of even more. So what I'm talking about here is that I now have a free hedge position for 10, 11% of my portfolio. That's pretty good. I also decided to jam the trim on my TLT position today, which are basically bonds, the 20-year bond. And I also stopped out of DDD. So when I mentioned that there's more than one way to manage the risk, this is basically what I'm talking about. If you want to learn more, again, you can come trade with me by going to our website, thealgo.com. But I'll also be live at 9:15 Eastern if you want to come hang out, and I'll give you some more commentary on this. So let me just see if I missed anything else here. We talked about Warren Buffett. We talked about we're already below 470, but I would say that we want to be mindful of weekly and monthly closes. I think I already mentioned that. We're below 470, so it's not time to be adding on. It's time to be stopping out. And that's what I just showed you with my portfolio. And now finally, if you want to come join us again, fantastic. We would love to have you at thealgo.com. If not, you can come trade with me. If not, I'll tell you what you should be doing right now. Again, should. I'm not a financial advisor, but this is what I did today. I went to go check the relative strength, and I gave a little cheat code here to our members. So what I'm saying is that at the time, I was looking at SPY sitting here at 470 after we violated 470, that area I just mentioned. I point out the weekly chart on the right-hand side and the daily chart on the left-hand side. I would encourage you to pause the video or rewind if this is unclear. Here I talk about how S&P is what we're comparing the relative strength to. I don't like to use RSI. I don't find it helpful. Why? The market can stay overbought or oversold longer than you can stay solvent. So when we look at SPY in the daily here, I'll just zoom in for those boomer eyes to make sure you guys can read it. And what it says here is that on the daily chart, we have a flat doji and we're back at yesterday's low. On the weekly chart, we are below last week's low, but we are above the November 18th low. So that's what we're comparing to. Now, if we look here to QQQ, what do we note? At the time I took this, what were we? Well, we were below the open with a full candle. We were below yesterday's low of the day. So it's weaker than SPY in the daily. There's short-term momentum to the downside. On the weekly chart, we're below last week's low, and there's a gap that hasn't been filled. And we're also below the December 18th candle. Man, QQQ looks weak, right? It's weak. Yes, it is showing weak relative strength compared to the S&P. And we already see that by looking at more than one way. $370 billion wipeout. Tech is the biggest decliner so far this year with chips. So we should not be surprised about that. And I have a little cheat code here at the bottom I'll go through. So just bear with me if you can wait an extra minute. I promise I will give you some value. All right, now we're going to look at TLT. Again, a position that I just told you that I sold, right? I trimmed, sorry. And a trim for me means that I can't lose. So I still have some of the stock. I like it. I still think it's going a lot higher. If we look here on the daily chart, we are over the opening price, right? We're over the opening. It's a green candle. Cool. So that should have been a hollow candle here. Oops, I made a mistake. What? Justin makes mistakes? Yes, that's right. I make mistakes too. I'm not perfect. Hollow candle, which means that we're actually over the opening, which means we're stronger than SPY. We're over yesterday's low of the day. Nice. So that's stronger than SPY. On the weekly chart, what are we? We were, at the time I took this, I think we're now back above last week's low, but we were below last week's low, matching SPY. And then we're over the December 18th candle, which is right here, right? We're over that December 18th candle. So that's matching the S&P. So this one here is a little bit stronger than the S&P. Stronger on the daily, tracking on the weekly. That's really important to track. If you look here to UNH, this is United Health. Again, that other stock that I mentioned this morning that I got an exit on. So I got a trim, I got an exit. Boom, boom. Nice trades. Loved it. UNH or United Health, the 11th biggest stock in the S&P 500. What do we note here? On the daily chart, again, on the left-hand side, what do we know? We are over the open or a hollow candle. Oops, Justin, you should really check these things before you record. Hollow candle, stronger than SPY. Over yesterday's low, stronger than SPY. On the weekly chart, we're over last week's low, stronger than SPY. We're over the December 18th candle, matching SPY. What does that mean? Man, these things are strong. So what this means is that S&P is what we're comparing to. QQQ is the example that is weaker relative to the S&P. TLT is an example that is stronger relative to the S&P, but it's also tracking on the weekly chart. Short-term momentum on the daily, tracking on the weekly. UNH is an example of one that is stronger relative to the S&P on both timeframes. I.e., here's a takeaway. Here's what I would expect. If the S&P goes up, QQQ will likely go up less. If S&P goes up, TLT is likely to go up as much or more. If S&P goes up, UNH is likely to go up more. If S&P goes down, QQQ is likely to go down more. If S&P goes down, TLT is likely to go down as much or less. If S&P goes down, UNH is likely to go down less. So I know this stuff might be complicated. I really encourage you to go back and rewind if you want to know more about that. If not, subscribe to the channel by clicking on the right-hand side. Join me for the live stream tomorrow. And if not, I left you a beautiful weekend video here with my 2024 outlook. Thank you so much for tuning in. I look forward to seeing you tomorrow.